Sabji Chatterjee recording our weekly session for Charts of Fun. This is for the week of August 11th, recording this on August 17th, Sunday afternoon. This was a very interesting week where both the CPI and PPI data came out. On Tuesday, CPI data was not as hot as expected. The expectation was it to rise slightly, and it basically came at 3.1%, was as an expectation of the previous month was 2.9, so from 2.9 it came up to 3.1. However, for PPI, it was completely the opposite. It was extremely hot. So the CPI month over month was 0.3, and the annualized rate was at 3.1. That's the core CPI. Core PPI, the previous month in June was at 2.6, and it came out at 3.7 annualized in the core PPI for the month of July. Month over month was extremely hot. The expectation was for 0.3 month over month, came in at 0.9. Market got extremely nervous. So after the CPI data on Tuesday, there was massive expectations of very high probability of a rate cut in September. We know that the job data for July had been weak. There was a negative revision of 258,000 jobs for May and June. Market was expecting, based on the employment side of the mandate for the FOMC, they would cut rates in September with probability of as high as 95% of that rate cut. However, after the PPI on Thursday, market got a bit unsure about that rate cut. We do have a key meeting coming up in end of next week. This is on Friday. We will hear from Chair Powell at Jackson Hole. This is a key economic meeting that happens every year on the third week of August timeframe. So we'll see what Powell signals, and many are expecting that he might turn out to be his usual hawkish self and be extremely cautious about signaling a rate cut in September. If that happens, market wouldn't like it. Another key event the market is watching next week is President Trump threatening on Friday that he's going to finally announce the semiconductor tariffs, which have been pushed out for a bit. On Friday, he had even given hints that it could go as high as 300%. Extremely, extremely aggressive tariffs announced on the semiconductors, and primarily he's negotiating deals with individual companies, saying that if they are investing in U.S. Manufacturing, then they could negotiate their respective rates lower. But blanketed 300% tariffs on semiconductor, is going to hurt the economy really bad, especially the stock market, knowing that semiconductors are a big part of the tech index that's causing and powering the rise. So today we're going to straight look at our blog site, chartsarefun.substack.com. Appreciate you subscribing to it. Just your email and you'll get the blogs when they come out. Our YouTube site is at Chartsarefun. We publish weekly videos. Hopefully you find these insights useful. We really believe charts are absolutely a lot of fun. We try to explain why they are so much fun, why they help give you very key insights about the market. In particular, today's theme will be all about Bitcoin and S&P 500. We're going to keep it simple. We're going to show you Bitcoin has had a tremendous run since the breakout of the cup and handle pattern from its weekly chart in the November, right after President Trump won the election. He's a pro-crypto president, had promised a lot of pro policies on the crypto market, enjoyed and celebrated his victory and broke out. So we're going to look at that weekly chart of crypto, Bitcoin in particular. But there is a seasonal trend. Every 4 years, Bitcoin has a halving event. So the last halving happened in 2024 April. The one before that was 2020 May. And after every halving event, typically up to 18 months, a rally continues, it peaks, and then a winter or a bear cycle of the crypto or the Bitcoin ensues after that. So we're going to look at the chart, and we're going to look at a very interesting repeatable pattern from the 2021 climb of the Bitcoin to its high, and how that seems to be repeating again in 2025, 4 years later. So we're going to look at that. And then I'm going to end it with S&P 500. We know that that's been an amazing climbing index. It represents top 500 stocks, but for all purposes, the top 8 stocks are a big influencer in that S&P 500. For almost 30% of the weight is from those stocks. We know that these are the Magnificent 7 stocks, plus if you add Netflix to it. These are like very, very high momentum stocks, have incredibly benefited from AI spending, AI powered growth, and euphoria, you could call it that as well. To that 8 stocks, you can add another stock that has absolutely shot up called Palantir that has done incredibly well over the last few months, over 400 billion market cap. Crazily selling at valuation wise almost over 100 times its revenue. They had about 4 billion of revenue selling at 400 billion. That said, we're going to kind of show you where we think S&P is weakening in its momentum indicators, and we feel that S&P in principle, like Bitcoin, is setting up for a pullback in 2026. So we in many ways are looking for a pullback in the market in 2026 like we had in 2022, and we'll explain some of the chart patterns that explains that. So producer price index was as the consumer price index. Let's look at the core where we're taking out food and energy. And we can see the numbers right here. The producer price index came in at 3.7. And we can see this annualized with the kind of the purple colored line, or you could call it the darker blue colored line. And that's a 3.7. It came up from a lot from the previous month in June at 2.6. 110 basis point climb in producer price index, 2.6 climbing to 3.7. Early signs of wholesale prices going up down the line gets passed on to consumers. So that's the concern, that the tariffs finally have caught on. A lot of the producer price index rises more than goods were in services. Primarily transportation and trade-related services caused that big climb in the PPI, which are early indicators of that to be then passed on to the consumers in consumer prices. Consumer prices was a tamer, came in at 3.1. So month over month was 0.3 in core CPI, month over month was 0.9 in core PPI. So that 3.1 in CPI was market friendly. Market thought this would indicate Fed a good chance to cut the rates in September. But that hot PPI number at 3.7 is got the market quite nervous, and we'll have to see what Chair Powell signals in the upcoming meeting in Jackson Hole. That's this week. After that PPI data on Thursday, Scott Bessent, our Treasury Secretary, made some statements in one of his interviews, I think it was in Bloomberg, talking about Bitcoin. And he had said that the strategic reserve that President Trump has created has basically taken all the forfeited Bitcoins and it's already in there. They are effectively not making any claims of buying open market Bitcoins yet. All that they're committing to is if there is a possibility of doing budget neutral purchases to Bitcoin, then they might be open to it. They have not indicated what that budget neutral pathway to Bitcoin buying could be. And that caused Bitcoin, which had just broken out last week, shot up from its previous high at 123, had gone up closer to the 125, and then it sold off. So let us look at a comparison of the Bitcoin. As I said, there's a 4-year cycle. After every halving event, it climbs for 18 months. So the previous halving in just that happened in 2024 April. From there, we are almost into the 18th month. If you do 18 months from 2024 April, we're talking something in the span of the October, so which is a couple of months from now. In the 2020 halving into 2021, that peak came in November. Now, the blue colored rectangle region is very similar in pattern to in terms of the symmetricity, time-wise, the shape of the pattern and so on to what we are seeing now. If you look at the blue pattern, we can see that from the left edge of the rectangle, it took off. So it was, somewhere hovering around whatever the 17,000 level, broke up to 64.9, pullback, tested that rising. In this case, the blue is the 50-week moving average, the red is the 20-week moving average. Pull back sharply to test that rising 50-week moving average, retested a higher high above the 64 to 69. And then from there, it came back down. So the red ellipse is the last part of the rally, of that 18-month rally before it sold off. And it sold off from 69K down to a 15.5. Call it a winter cycle of the Bitcoin sell-off. A very sharp sell-off happened from 69. So that's almost a 78% sell-off. That typically is what Bitcoin does when it has its bear markets. Something similar happened back in from 2017 into 2018 as well. So now the blue rectangle is very similar pattern-wise to what we see here. So here from the 74,000 in the low 70 to 73,000 after President Trump's winning the election in November, it broke out. That breakout moved up to 109, came back to test in a very similar way the rising 50-week moving average at 74.4. That was the low of the trade war bottom on April 7th. Came up to a higher high to 112K, pullback, tested the rising 20-week moving average in red near 98.3. And now we are in the last part of this rally, similar to what we are seeing here. Last part of the rally. Key is, are we going to repeat and have a sell-off into 2026, similar to what we saw from late 21 into 2022? Almost a year or so of sell-off with 78%. Maybe we see something similar, 70 to 80% kind of a correction in Bitcoin. Let's look at the weekly chart of Bitcoin, in this particular case, drawn over a cup and handle from the 69K to the 15,480, it's rounded to 15,500 to the 73.8K. So 15.5 to 73.8 is a 58,300, 58.3. At the 58.3 to 73.8, that measures to 32.1. So 32.1 or 32,100 is where this measured cup and handle target is. Key is the breakout happened, as we said, in November after the election from that cup and handle. It has been climbing, but recently, what are we seeing? This is the last part to this bullish climb. You're seeing a bearish rising wedge pattern. That bearish rising wedge pattern in many ways has negative divergence, weakening momentum, lower highs in RSI, lowering volume, which is a classic pattern that you watch in rising wedges, is the volume declines as the rising wedge forms. So you take the highs, you take the lows, they are kind of converging towards an apex above that 130 line, 130,000 line, and volume is declining, RSI is weakening, so is MACD. MACD is at a lower high. This indicates the possibility that we might be getting very, very close to a top in the Bitcoin, something for us to be very careful about. In the previous chart, we should follow out some other patterns in here. Is in the pullback that we got from the first climb to the high, that 28,900, that happened in the June timeframe. In this chart, it's just shifted by 2 months. So what was in June happened in April. So 2 months earlier than what happened in the previous cycle. So June became an April, which means if you got a peak in November, if you shift by 2 months, we may not even get till October. There's a possibility around September we may peak out. Bitcoin could have its peak, and from there we could have the bear market sell off. That's what we have to be very careful about. And if you look at the apex of the bearish rising wedge, we're a couple of weeks off. It's possible that we may make another climb higher to the top edge of the wedge and from there break down. And we are probably in the last leg of the Bitcoin's rally, something for us to be careful about. That said, there are some other indicators where bulls are pointing. Just like we have a cup and handle on a weekly chart. In a near term, on the chart of Bitcoin from the January high at 109,000, 74,400 to the 112. That's a beautiful cup, a handle formed from there on the pullback to the 98,300, a breakout. If you measure this cup and handle from the 109 to 74 to 112, the 74,400 to the 112 measured something around what, 74, 37,600. At the 37,600 to the 112, that measures to 149,600, closer to the 150,000 number. So bulls are looking for this cup and handle to play out, and the even more mega bulls are looking for a bullish flag. So the flagpole climbed from 74.4 to the 123,000. Then pullback happened to the 112, retested that 112 at 111,900, and then the breakout. So they're looking for this bullish flagpole pattern breakout that measures north of 170 to 175,000 is what the mega bulls are looking for on this run up of the Bitcoin. That said, if you look at a 2x Bitcoin ETF that's pegged. If Bitcoin keeps 2%, it goes up 4%. That is got a beautiful, call it a cup and handle, from 68 down to 28 up to 68. If this cup and handle on this bullish um, twice X Bitcoin ETF pans out, 28, the depth of the cup from 28 to 68 is $40. Add 40 to 68 measures to 108. So from a 61 to closer to 108, you're talking about 47. So let's round it up to a 48 over 68. That's roughly what? 8 over 10, 80%. So that's the kind of climb that Bitcoin twice X ETF could have. And if that's about what the climb is, you're talking about close to half of that, which is a 40% climb on Bitcoin from where it is, which measures north of 165, 170 is where Bitcoin could climb from where it is today. So that's a possibility. That said, we feel that there's a good chance, looking at the bearish rising wedge, that if this and the timing on this pattern, that we are 2 months off. So what happened here in June has happened in April. We've been climbing. So this time, instead of topping out in November, we could top out in September, which means if this bearish rising wedge reaches its apex in the next few weeks in early September or middle September and breaks down, that doesn't measure as high as 170. If any, we'd be lucky if we can get that 132,000. So 69 to 15 to 73, 58,300 added to 73,800. That measures to 132,100. So 132 could be it. And that nicely aligns with this bearish rising wedge, is what we think potentially. And that could mean that 132 level, if you look at on BITX, this is near term cup and handle, 68 to 57 to 68. That $10 of 50 or $11 of 57 to 68 added to 68 is 79. That measures to, if you do the twice X move on the BTX and half of that, that measures to 132, 133 target on Bitcoin. So we think this is more of a possibility. Look at the negative divergence on BTX. As it has been climbing, if this was a strong cup and handle, you would have had a higher, stronger RSI. That was not the case. RSI is weakening with the climb of BITX, much lower RSI than it was in the November climb to what we had seen recently in the May climb, and then more recently into the July climb. We can see weakening RSI, weakening MACD, classic negative divergence. So we are not so sure that BTX will climb up to 108. If any, a climb up, there is a leg of climb coming. We think that upside of going back to the top of the rising wedge and going back to the the weekly charts cup and handle from 69 to 15.5 to 73.8 to 132 is a possibility, and hence that 132 on Bitcoin might be the topping sign, and that could align with the BITX topping out around the 79 level is what we are watching. Now I'm going to talk about S&P 500. Keeps climbing. There's no, respite whatsoever. Many were looking for S&P to fail a lot before, especially when it pulled back sharply from 64.27 to 62.12. Even we were looking for this to be a head and shoulder breakdown from 60 to 12 to below that. So 215 points from 212, we were measuring a target near 59.98. That was our measured target. We were wrong. S&P was extremely strong. So it came back forming an ascending triangle on the hourly chart. Every candle here is an hourly chart of S&P. What does this measure target to? From 62.12 to 63.89. That's about 177 points. Add the 177 to 63.89, 6,566. That's the measured target on this. If you look at the inverse head and shoulder on the daily chart of S&P, 5,700 is the neckline, a left shoulder in the late March, a head at 48.35 back to 5,700, symmetric right shoulder and the breakout. 48.35 to 5,700. How much is that? That's closer towards, we're talking about 865 points. 865 added to 5,700, 65.65. Look at how close that level is, that measured target is to what we're seeing on the hourly chart. 65.66, 65.65. We think that's pulling like a magnet. There is negative divergence on the daily chart. We can see that RSI is weakening. We can see that MACD is not pulling any higher highs. MACD is weakening. Further, what we do worry about is look at the S&P 500% of stocks above the 50-day moving average. Notice what happened in 2021 and then into 2022 pullback. The S&P X A50R, as in above 50-day moving average, kept printing lower lows and lower highs to the point when it broke down to a level as zero point 0.8, as in over 99% of S&P stocks were below their 50 average. Only 0.8% of S&P 500 stocks, which is effectively one or two stocks of S&P 500, were above the 50-day moving average. That's how oversold it had gotten. Look at when that had happened. There was a 50 below the 200. These are the moving averages in the weekly. The red in 200, the blue in 50. 50 had negatively crossed below the 200 and had been declining for that entire bear market into 2022, into 23. Then it broke higher. The last several months, all of 24, it has been hovering above, the blue above the red. Now, where are we headed? Blue is about to dip below the red, like we got here. So we are in many ways getting closer to what happened into 21, into 22, from 25 into 26 is what we are thinking possibly is what could happen. We could get a recession. This market has taken time to react to these very high interest rates. Powell seems to be extremely stubborn and not giving up on reducing rates. He is extremely worried about the negative impact to prices going higher from the tariffs. We know that the tariffs have on average gone up to 18%. There's still some tariffs undecided. China has not yet settled. India has been threatened to 50%. A lot of those tariffs are not yet fully confirmed on where they will land. And that 18% could perhaps climb a little higher, especially if you now start getting a semiconductor tariff announced at 300% is what President Trump is threatening. This breakdown of the blue, the 20 is the 50-day week moving average below the 200 week moving average indicates declining trend in the percent of stocks above the 50-day. And that decline typically follows with the market pullback. So that shows market strength deteriorating. We saw that initial from 4% went up to 84. Since then, lower highs, lower lows from 61 to 44. We can expect that break below the 44, and by the 2026 timeframe, go back to that 4 number again. If you do at 84.40 to 44.40, that's 40 points. Subtract 40 from 44.40, you get exactly 4.4. We could retest that 4.4 level from April into 2026. That's what, and look at the MACD, has already had a bearish cross of the black signal line below the the 26-week red line, the smoothened line. So that indicates a bearish cross on the MACD. The moving averages are also preparing for a bearish cross, indicating strength in the S&P's climb deteriorating. Similar thing with the bullish point and figure charts. If you look at that percent from 10% to 76, declining, lower high 76.4 to 76 to recently lower lows, 65 printing at 54. This is also, look at how the moving averages, in this case, the 50 week in blue and the 200 week in red, getting ready for a bearish cross. MACD here has also had a bearish cross. RSI has begun to decline. This could also mean a breakdown to lower lows in the bullish percent. That means fewer and fewer stocks in the S&P 500 are acting bullish. So the bullish percent weakening, the percent of S&P 500 stocks above the 50-day moving average weakening are all indicating potentially a sell-off coming into 2026. Now let's look at the fear gauge, the VIX, which is really the put calls in the S&P 500. What is the volatility telling us? Look at the pattern of higher lows. 11.5 was the low in the entire 2024 first half. Then 12.7 came in the later part of 2024. The very recent pullback that we saw, the 14.3. So some 11.5, 12.7, 14.3, a pattern of higher lows. Look at what happened. Pattern of higher lows when it broke out from 21 to 22, and then VIX started kind of range bound in a higher band from in the low end at 17 to the high end at 38. Are we setting up for a similar look at what the MACD histogram is telling us? Higher lows, right? So the MACD histogram is painting potentially a break higher, and that break higher of the MACD histogram, the RSI could then start climbing. It has been steadily at the 45, 44 level, not breaking below, indicates that expect a volatility. And above all, look at the golden cross, the moving averages. These are very long-term moving averages, take quite some number of weeks and months for it to start climbing higher. Look at how into 2022 early part, it bullishly crossed higher. And as it bullishly crossed higher, VIX stayed in that upper band. Then it pulled back to the lower band, where VIX traded in the low levels at 11 to 12 to 23. That happened for a couple of years. That was the bullish climb. Now we are about to bullishly cross the 50 above the 200. That bullish cross could indicate an upper band of VIX very similar to 2022. So this VIX looking like it wants to trade in an upper band from the low at the low end at 70 to the higher end at 38 is potentially what we see a repeat happening. There again, bullish cross of the 50 above the 200 caused that upper banded move on VIX. If a similar kind of thing sets up, bullish percent index showing negative divergence, weakening in lower highs, lower lows, indicating lower values of bullish percent index coming. MACD's had a bearish cross. The S&P above 50 is also showing bearish. So in summary, what we are looking at is Bitcoin. Bitcoin is chart looks very similar to the 2021 climb. It's in its final leg of its climb. You can see that the first leg of the climb, pullback, testing the rising 50 week moving average, then back to a higher high, and then it breaks down. Same thing, the first climb, testing back the rising 50 week moving average in blue, climbing to a higher high, and that elliptical region is where the last few weeks of that climb is where we are right now. So this indicates, as we've shown sometime in the September timeframe, 2 months shifted. We saw that the low in the recent climb happened in April. In the previous climb to 2021, it had happened in June. So it's 2 months shifted, which means the peak will also be 2 months shifted. So what was in November will now potentially happen in September. Also, the bearish rising wedge indicates Bitcoin is kind of getting into its part of a bearish sell-off. We can see that this rising wedge points to somewhere in the order of 130 to 132K is where we think this is headed. This measured beautiful cup and handle on the weekly also measures to 132. So if you take the 15.5 to 73.8, that's 58,300. At 58,300 to 73,800, you get 132,100. That's our measured target. Once that happens, this bearish rising wedge would reach its apex, and from there a breakdown, negative divergence RSI, negative divergence in MACD, declining volume, picture perfect bearish rising wedge. So bulls looking for a 170 or even from this near term cup and handle from 109 to 74 to 112 to 150 might be disappointed. We think this is unlikely unless it stretches higher. Anything is possible, but we feel, if any, this is setting up for Bitcoin to top out in September. This from the Bitcoin 2x ETF BITX. This also has a potential bigger term cup and handle from 68 to 28 to 68. If that pans out, then of course, this we're talking about a BITX going to 108 because the depth of the cup from 28 to 68 is $40. At 40 to 68, 108. And 108 move from 61 would effectively mean a 75, 80% move in BITX from current levels. And that would mean twice X. That means Bitcoin would have that level of almost close to 35 to 40%. And Bitcoin in that case could reach closer to the 170, 175 that the bullish folks are forecasting. We feel that's unlikely. We, from the bearish rising wedge, feel 132 to 135 is where it might top out. If any, this shorter term cup and handle could pan out 68 to 56.96 or 57 to 68. That's $11. Added to 68 is 79. We think BITX tops out at 79. Why we think so is because of the classic negative divergence. RSI is getting weaker as the BITX climbs higher highs. MACD is getting weaker. So we will get a higher high in BITX in the next couple of weeks, potentially towards that 79. And that would perhaps be it with respect to the BITX top, and that could match with the Bitcoin reaching 172. S&P, that 65, 65 or 66 is where we think it's headed. We think that this consolidation. It's kind of range-bound consolidation the last couple of days. This is hourly chart. We did get the CPI breakout on the, after Tuesday, we got the CPI breakout. Then on Wednesday, further from the interest rate initial breakout gapped higher, but then throughout the day, it kind of pulled back. Thursday's PPI came out, pulled back, and then options expiration Friday also the stayed on the low end of this rectangle. We think potentially maybe the deal is going to be made in Russia, not a ceasefire, but now potentially some form of a peace deal is going to be made by President Trump. If that happens between President Zelensky and Putin, this could lead to a market breakout. So that could be the near-term catalyst we're going to watch. And with that, we are concerned that once S&P gets to its target, there is weakening momentum. RSI is, in this case, the S&P 50, S&P 500 talks about 50-year kind of lower highs, lower lows, indicating bearish cross of the 50-week below the 200 and a bearish MACD cross, indicating that we are headed towards weakening, internals of S&P. There's going to be fewer and fewer stocks that will have bullish looking charts. And the same thing with the BP, which is the bullish looking point and figure charts. That's also kind of preparing to break lower. The MACD's already had a bearish cross. So we think lower lows are coming on both BPSPX and SPX A50R, which is above the 50-day. And to top it all, VIX is threatening to have a decent climb, an upper banded move from the 16 to 17 on the low end to 38 for the entire year of 2026. So you're looking ahead to a volatile year in 2026. We think the winter of the Bitcoin pullback into 26 with the market pullback will indicate higher volatility and a time period for us to be cautious about. With that, good luck investing. We'll talk to you next week. Thank you.